for this evening session. I request our branch chairman to formally welcome the gathering, and then you proceed with the presentation.
Thank you, Magesh. Before welcoming the speaker, we stand for our institute motto.
सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you. Good evening, members. On behalf of Management Committee of Tirupur branch of SARC of ICI, I welcome our today's speaker, CAM Vishnu Kumar. Yes, he is none other than our own member, our own blood. Welcome, Vishnu, for this meeting. And also I welcome our members for this CPE meeting on export of service and goods and incentives. Thank you. And now I proceed to Magesh.
Thank you, Chairman. Now it's time to introduce our speaker. As you all know, CA Vishnu Kumar, and Vishnu Kumar belongs to our own city, Tirupur. And CM Vishnu Kumar, a fellow member, passed CA in the year 2014. He is also a member of ICSI in the ICSI. He passed CS in the year 2012. Completed certification course on Forex and Treasury Management and concurrent audit of banks conducted by ICAI. He pursued articles of training under CA and Sivachalam Sir, Tirupur. He is audit partner of KSR & Co, Chartered Accountants, Tirupur. He is a member, All India ICAI GST Help Desk, faculty for income tax officials in MSTU. Convener, Indirect Tax Committee, Tirupur branch of SARC of ICAI for the year 2018 and 19. Member of Career Counseling Committee of Tirupur branch of SARC of ICAI 2017, 18, 21, 22. Alumni board member in Syllabus Framing Committee of Department of Commerce, Congo Arts and Science College. Regular guest lecturer in PSG College of Arts and Science and PSGR Krishnamal College of Arts and Science. GST trainer for chartered accountants at various branches of the ICAI and CA students also. ICAI trainer of CA students for the GMCS program. And with these few words, I introduce CM Vishnu Kumar to this audience, and I request our today's speaker, CM Vishnu Kumar, to take over the session and proceed with the meeting. Thank you.
Thank you, Mahesh. And thank you, Chairman Sir, for organizing a session and inviting me to present a paper on recent amendments relevant to export of goods and services and the amendments relevant to the refund part of export of goods and services. Plus, I thought to touch a little bit about the incentive schemes available for, especially on the Ministry of Textile part. What are the incentives available, particularly on the textile part? Because pretty recently we have come across with the notification that the benefit under ROS CTL scheme been extended. So we shall address a little about what is this MES, ROS CTL and RODTEP also. And before that, we'll start with the basic parts of understanding what is this zero-rated supply and the definition under IGST Act, Section 16 and Section 26 of CGST Act, and the clarifications, circulars, notifications issued right from the initiation of the GST Act, that is from 1st July 2017 till now. We've been witnessing a lot of circulars, and that too in the year 2019. I would say that there is a master circular, that is circular number 125, that has clarified a lot of practical issues, the most of the export clients that they faced when they apply for a refund. After that, based on that circular, one second, sir. Are you getting an echo, sir?
இல்லையே போன் இல்ல கரெக்ட்டா தான் இருக்கு.
சாட்ல சார் ஒருத்தர் பேக்ரவுண்ட் சவுண்ட் வருதுன்னு சொல்லியிருந்தாருங்க சார்.
இல்ல இங்க கரெக்ட்டா தான் இருக்கு.
கிளியர் சார். ஒன் செகண்ட் சார், ஒன் செகண்ட். அது கரெக்ட் பண்ணிடுறேன்.
கரெக்ட்டா இருக்கு விஷ்ணு.
Is it fine, sir? No. Yes. So we'll take through slides, and I will tell you what will be the agenda for today. And initially, I will touch up with the provisions related to the export and the classification of what are all the supply which is covered under zero rated, and the definition under aggregate turnover, and the relevant date. Will give a lot of importance for understanding the term relevant date, because we've been mostly involved in, particularly practicing in Tirupur, we mostly involved into applying for refunds relevant to export of goods. Whereas most cases, if we proceed for export of services, determining the relevant date will be a bit different. And the same manner, if we determine the relevant date in case of export of goods through payment route, that is also different. So I will give a lot of importance in understanding the term relevant date. After that, we'll touch up what was previously we discussed 2 years back when we had the circular 125. And from 125 circular, what are the recent amendments that they have issued in this circular 147 and the later notification under notification number 15/2021 in central tax. Those are the coverage area. Plus, I will run through how this process of refund being done in the GST portal. And then finally, we'll touch up with, as I said in the initial time of the session, that I will run through this RODTEP, ROSCTL, MES, and this abolition of export performance certificate, which was earlier issued as a added advantage to all the exporters covered under the AEPs. Hope slides are visible, sir.
Yes, Vishnu.
Yes. So coverage for today, we'll have again a basic understanding on how the term zero rate supply export is defined under section 2, subsection 6 and 16 of IGST Act, and covering section 239 and 147 of CGST Act, defines about the turnover and zero rate supply again. Then related to the provisions related to refund, from section 54 to 58. The 54 to 58, only the relevant things which is required, especially the section 54, subsection 10, subsection 11, because in recent times, so many of us have come across this problem of classifying exporter under risky exporter classification, especially all those exporters who opted for payment route of export. Why? What is the reason for that particular classification and how to come out of it? And in what manner the jurisdictional officer here have classified our case or taken up our case and giving an instruction to the superintendents present in our concerned jurisdictional officers present in the port to classify our case as a risky exporter. For that section 54 subsection 10 and section 54 subsection 11, here and there we will have a little understanding. Then the amendments which came in relevant to deemed export, there is a lot of variation with deemed export, merchant export, because before GST we had this concept of merchant export, but now The deemed export is totally different from what is there in the concept of merchant export. Merchant export, it is in a different connotation now, that any person who is willing to supply to an exporter and at a reduced rate of supply, at a reduced rate of outward supply, they can opt as per the circular 40 of 2017 that they can offer it to the exporters, export-oriented units at 0.1% supply. 0.1% supply. That is different category. That is not covered under deemed export. Whereas deemed export, it's totally there is separate notification there under 75. And that notification, there are 4 categories of supply which is classified under deemed export. In deemed export, there are possibilities both for the supplier and for the recipient to apply for refund. Yes. So in case if I am a deemed exporter, I'm going for a refund, and if I am a recipient of the goods, what are the possibilities and what is the methodology involved? And in as I said in the Master Circular 125, they very clearly mentioned the recipient should not claim the ITC, but they are eligible enough to go for claiming refund under Rule 89 Sub-Rule 4B. How is it possible? Because rule is saying something different when it was practically processed in the GST portal. In GST portal, whenever we go for applying RFP 01, the first thing that that application does it is when we complete the submission, the amount that we claim, it straight away goes and hits our electronic credit ledger or cash ledger. So it asks to debit either electronic credit ledger or cash ledger. But there was if it directly goes and credits to the electronic credit ledger, where the Master Circular 125, they said claiming of ITC is not possible for the recipient or in case of deemed export, and if he goes for the refund, it has to be done separately. So that confusion was overcome through this Circular 147, which means an error was done, an error was committed in framing the rule, and that error was clarified through this 125 circular. Again, that clarification was not supported by the GST portal. And then, according to the GST portal functionality, again another clarification came in the month of March 2021, and that is there in Circular 147. In that area, we spent some time. And modification relevance to this 2-year time limit. In most of the cases, that too, we know very well that from the relevant date, as I already said, we need to give a lot of importance for the relevant date. From the from the relevant date, we have to apply for the refund within 2 years from the relevant date. In case we missed out that period, maybe if we are applying for the refund only at the last month of the 2 year, since the period is getting near, at that time only if we are applying for, and the application, we did it on the last 15 days time, almost 1 year and 11 months we missed out. In the last month, in the last 15 days, when we go for applying for refund, what happens? Refund application form, if it is accepted, that is if it is acknowledged and RFD 02 is issued, then it's well and good, it will be taken up for process. Maybe further time, they will ask only the queries relevant to their application. In case, if the officer, the corresponding officer identifies a deficiency itself in the application RFD 01, what he does, he automatically issues this RFD 03. The moment he issues RFD 03, at that time, if the 2-year time limit is exceeded, do we have an opportunity to file again? Because of delay in issuing this deficiency notice under RFD 03, do we have any extension of timeline? That is also clarified in circular number 147. See, almost this circular came into effect only from March 2021, which means the past 4 years, if there are any cases which we filed at the last minute and deficiencies are issued, then we have no other choices rather to go for an appeal. That we have not crossed the timeline because of the deficiency notice that we received after the timeline. Whereas the law itself is required that we need to apply from our side within the 2-year time. So do we need to take up the time calculation of the period at which we applied for, the date at which we applied for, till the time when the officer issued this deficiency notice? That timeline, what we do with the timeline? In between that timeline, if we cross this 2-year time limit, what is the solution for it? So far, before this 147 circular, it was totally different. After 147, it is totally different. That will be the discussion. And then clarification relevance to this tran credits without LUT. If I go for application, what happens? If realization is not happened, do I need to repay all my refund process that I've claimed. In case if I'm going for repayment, what is the process and what is the timeline? And during this COVID time, in the first wave that is happened in 2020 also, RBI have came with a circular and extended the period of realization for exports. That also we need to take up. May not be in the year 2021, but during the period of April 2020 to July 2020, that period they have given some extension. That also we will look into. This is the entire agenda for our next 2 hours. Let me start with the basic introduction of what is export of services. Export of services. Export of services for the purpose as any supply by a service supplier of a service located in India and the recipient is located outside India and the place of supply has to be outside India. Then one more important point, the realization has to happen in a convertible foreign exchange. Convertible foreign exchange. Fifth point also let me complete and then I will summarize. The supplier of services and recipients are not merely an establishment of a distinct person. So the fifth point they want to highlight, the services provided from a person in India to a person outside India should not be a distinct person. Should not be a distinct person. They have to be a different person. In distinct person definition here, a person holding same PAN number or having a same operations, having same PAN number, having different operations with different GST numbers within the country, or having operations in India and they also hold the control and establishment over the operations outside India, and services are exchanged between these two concerns, and that has to be excluded. That will not be considered for a zero-rated supply. That will not be considered for zero-rated supply of services according to section 2 subsection 6 of IGST Act. What it means, what it tries to explain here. I am an exporter here and I am providing a designing services to one of my buyer located in UK. So that particular services which I am providing, I am invoicing it today. Since I have completed my services today, for the service categories, we know time of supply from on or after the date of services, but well within 30 days from the date of provision of services. So today, that is 21/7/2021, I have provided designing services to a person located in UK, and I have raised an invoice also on 21/7/2021. Parallelly, here the person is located in India and the person received is in UK. So first two conditions are satisfied. Third condition, yes, it is in outside India, that is also satisfied. Fourth condition, against that designing charges invoices, he sends a remittance under USD or in UK pounds. So that is also satisfied. Fourth condition, both of them are unrelated. That is also fine. If this is the activity, then it is fine. It is considered as export of services. What is the value that we need to declare in our GSTR 1 and GSTR 3? So today I have declared it as a designing charge and raised an invoice based on the conversion rate that I will declare a value that I arrived at on the invoice date in GSTR 1 and 3. Whereas I have realized the same not in July 2021. Rather, I have realized it on December 2021. At that time only, I can able to generate this foreign inward realization certificate from our bankers. For the purpose of claiming refund under export of services, the designing charges revenue which I have declared in my 1 and 3B and in my books of accounts in July will be considered as the relevant period, or do that for the purpose of export of services. The realization that happened in December 2021, will that be the relevant period? And that is a question. There is a clear amendment, and for the purpose of refund, we will compute only adjusted total turnover as mentioned in Rule 90. Rule 89. For the purpose of aggregate turnover, determining the requirement of our registration, determining the value to be declared in our GSTR 1 and 3B, we will look at the time at which we raise the invoice or the date of completion of services within 30 days as per the time of supply provision. So in 1 3B books, it will be in July for the purpose of refund in computing adjusted total turnover definition. Adjusted total turnover definition. Here we need to be clarified with 3 definitions. First one, aggregate turnover. It is in the month of July 2021. For the purpose of computing zero-rated supply of services. Zero-rated supply of services mentioned in Rule 89, it has to be considered as in the period December 2021. And again, we are clear with the numerator for computing the formula for refund for export of services. What about the denominator? Denominator, it says about the adjusted total turnover. Adjusted total turnover, it includes all the turnover in a state as per section 2112. But in that, they specifically exclude supply of services, and then they are separately connecting all the zero rated supply of services plus other services. What it means? It means for the purpose of adjusted total turnover that we compute in claiming refund also, we will take up only the realization date, that is the FARC that we have generated in the month of December. So in relevant to this 2 subsection 6 export of services provision, and connecting the same with the later slides I will show you, and connecting the same with the clarity issued under circular 147, not even before that, not in 147, even before that. The clarity is for aggregate turnover, it is as per the invoice date as fit into the time of supply provisions. Whereas for the purpose of zero rated turnover and for the purpose of computing adjusted turnover, it is not just the supply alone to be ensured. Supply has to be completed, and also the realization part has to be ensured. Realization has to be ensured in foreign exchange, forex. Next. Coming to the section 16, this zero rated supply defined in section 16 subsection 1 of IGST. It says any export of goods or services, or export of goods or services to special economic zone developer or to a special economic zone unit, subject to the ITCs that we claim is not a block ITCs. All these things are eligible ITCs, and export of goods or services to a foreign soil, away from our country, and export supply to SEZ developers and SEZ units. These 2 categories are classified as zero rated supplies. And then that also, while claiming ITCs, we need to ensure that block credit ITCs are not claimed for purpose of matching with this export. And what are all the possibility options that exporter has? We are all very well aware of it. They have both options. One is with payment of IGST route, and another thing is without payment. In case if we are applying for refund with or making supply of export of goods or services through without payment, then we need to apply LUT, letter of undertaking, or bond. Now is not there. Most cases it is only LUT, letter of undertaking, and we should apply it in the beginning of the financial year for the welfare of the exporters, so that it will not be a violation in Rule 89 that if export is done and later stage they apply for LUT, it is actually the violation of Rule 89, because LUT has to be done first and then only export need to be preferred. In some situation, if an exporter forgets to apply for an LUT in the beginning of the financial year, but you have made exports, what are the possibilities for that export? Then he has to apply for the LUT immediately, and then he has to request for the concerned jurisdictional officer to condone the delay for filing the LUT. Otherwise, that particular export will not be considered as a zero rate supply, and we cannot take it up that particular total for the purpose of computing refund. Second category, without LUT, we pay IGST and then we claim that IGST paid through a certain process. The process is we opt for paying IGST. So whenever we arise export manifesto, and we will mark up the amount of taxes that we want to pay in our shipping bill itself, and then we will pay off that IGST that is reflecting in the shipping bill through our GSTR 3B, and we declare the same in GSTR 1 also. Once this export manifesto are ready, shipping bill they have declared with payment of IGST, and the value is quantified for paying taxes. Parallelly, the same was declared in 3B and 1. Automatically, the port through which we have processed this, or we have made the supply of export of goods, in that for that particular port, it will automatically get processed, and refund will be credited to the bank account that we have already mentioned in our GST login, and parallelly in our DGFT login also. These are the 2 routes that we have. What about the CGST Act? In CGST Act, in IGST Act, they have defined about this zero rated and everything. In CGST Act, they marked up and say in one particular area and defined it deemed export. What is this deemed export? Deemed export where goods will not leave India and payment may be received in convertible foreign currencies, and sometimes there are possibility that it can be received in INR also. This deemed export is applicable only for supply of goods, not for services. What are all those supply of which are considered as deemed exports? Let me spend some time on this particular slide to understand how this works actually in our particular place, in our district. Supply of goods by a registered person against advance authorization scheme. We should understand what is this advance authorization scheme. Advance authorization scheme is a benefit offered by this Director General of Foreign Trade for all the exporters. Taking examples from our own city, all the textiles, this garment exporters, through which if we are an exporter and if we are in a position to import some goods, so we will be given a certificate, a performance certificate based on our exports. Through that certificate, we can import certain goods without paying any duty, and parallelly, we will adjust it. We will match it up with the process and we will export the same. The difficulty involved in this first category is, for example, I got an order from UK to supply 100 pieces of garments. For manufacturing that 100 pieces of garments, I've imported some accessories like button, zip materials from China through advance authorization scheme. So through advance authorization scheme, what I did, I've imported zips and buttons and I have not paid any duty, stating these buttons and zips I have imported will particularly match against the 100 pieces that I'm going to export after processing to UK. Like that, we need to specifically match each and every item. That's the reason, considering the difficulty in the processing thing, because most of the exporters, they do import in a bulk and they were not able to match with particular orders at which they export. That's why most of the exporters will not prefer importing goods through this advance authorization scheme. Rather, they will pay duty and then they will do. But second category in deemed export is supply of capital goods by a registered person against export promotion capital goods authorization scheme. EPCG scheme, through which here most of the exporters here import capital goods through this second route, this export promotion capital goods authorization scheme. What is this particular route is about? Through this route, we import capital goods. Using that capital goods, we process and we do exports. The duty amount that we save in importing a particular capital goods. For example, I'm going to import certain machineries from Siruba, Japan. So that particular machinery, whatever duty that I'm saving, into 6 times, I need to make an export in a next 6-year period, or into 9 times in the next 9-year period. If I can able to fulfill that commitment or fulfill that obligation, then my duty to be paid in importing this particular sewing machines from Japan will not be asked for. These set of supply is also considered as, and this particular person who supplies capital goods or purchases capital goods to this EPCG authorization scheme and makes an export is covered under deemed exporter scheme. And the third item is supply of goods by a registered person to an EOU, 100% export oriented unit. If I am supplying a goods to a 100% export oriented unit, third category, most of the exporters who look forward for this deemed export refunds may fall into this supply to a 100% EOU. Here we are seeing a lot of organizations are classified as 100% EOU. If supply is not going up for the refund, then the recipient can also look forward for refund. Fine. So the declaration that if a recipient is going for refund has to obtain from the supplier is that they will not claim the ITC. Or recipient, from the recipient perspective, he has to get the declaration from the supplier that they will not go forward for the further refunds, and then he can apply for refund. And that particular place only we find a difficulty in the portal that without claiming the ITC in electronic credit ledger, how is it possible for me to complete this RFD 01 form? And then circular 125 is also not clear. So circular 145 cleared it absolutely, it has cleared it. There is no restriction in claiming the ITC in electronic credit ledger. Rather, after claiming the ITC and after claiming the ITC in electronic credit ledger through GSTR 3B, the requirement is recipient has to get a declaration. That's all. From the supplier. That's all. And as usual, the parallel process, we will file RFD01 and claim the refunds under Rule 89 4B. The fourth category, RAP categories, we are not mostly looking into this particular category of supplier gold by bank or a public sector undertaking, specified in notification number 50 of customs. Anyways, these are the three categories which are specifically meant as a deemed export. So merchant export is totally different from deemed export. Any supplier who is supplying under 0.1% scheme, and that is different from a deemed export. Deemed export. Now, deemed export notification, such a supplies cannot be made under a bond or LUT. The tax must be paid at the time of supply. Refund of taxes paid on such a supplies can be claimed. For example, take this example: dealer who is located in Rajasthan sells a goods to dealer B, who is in 100% UAE. B in turn sells the goods to a customer C in Germany. Supply by A to B is treated as an export. Here B is the recipient, A is the supplier. A is the supplier, right? If B recipient goes up and claims for a refund through this deemed export scheme, 147 circular allows you to claim the ITC and then go for applying the refund. And parallelly, once the refund form is filed, debiting the electronic credit ledger to the amount of refund claimed in this RFD01 is also allowed. That is from March 2021 onwards. Fine. What are the procedures involved? Notification 75. This is a very old notification. Still, I'm running through just for an understanding. UOU, STP or STP or biotechnology park must give a prior intimation by filing a Form A to the supplier and the jurisdictional officer of the supplier and the recipient. Form A, it has the serial numbers of goods procured, the date at which it is procured, and the pre-approved by the development commissioners located in that particular UOU, STP or STP or BTP. Supplier, and then they will supply goods with the regular tax invoices. This tax invoices must be endorsed by the recipient. Endorsement copy should be sent to the supplier and to the jurisdictional officers. This endorsed copies need to be filed well before the time either the recipient or supplier goes for a refund. Without promptly submitting all this endorsed copies, if we go for a refund, asking that this recipient is going to claim, supplier is not going to claim the refund at all, that will not be entertained. This is very similar case in case of inverted structure also. In inverted duty structure also, the same procedure is involved. There it is not Form A, B and all, rather all the purchase order that the supplier is received from the exporter, that need to be filed in the prompt jurisdiction well before. And then when the supply happens, and then the supplier also to get an assurance that in the shipping bill of the exporter who purchases it at 0.1% have promptly mentioned that this particular goods has been taken from this merchant exporter only under 0.1% scheme. So this shipping bill copies which clearly mentioning the supplier supplier at 0.1% plus PO copies all need to be submitted to the jurisdictional office within 30 days from the time in which we got it, in which the particular supplier received the orders. After completion of all this process, and then only if you go and apply for RFD01 refund under 0.1% scheme, they will go for refund under inverted scheme. There is another story there. Inverted scheme where we all very well aware of it, that outward supply rate is far less when compared to the inward supply rate. That because of that ITC getting accumulated, for that we claim refund. Here, if we are supplying to this 0.1% route, first, as similar to this deemed export supplies, there also we need to declare our PO copies and shipping after shipment, the shipping bill copies, everything to jurisdictional officers. Unless otherwise, if these things are not acknowledged properly within the regular interval times in the jurisdictional office, if we go for a refund form, they will definitely not enter. Rather, they will ask for all those details, and if they accept the condemnation for delay in filing all those details, and then only they will accept RFD01 form. Next, here they will ask for invoices details of deemed export supplies and undertaken by the recipient that no ITC can be claimed. Right? This undertaking played a remark for all these amendments to come. This no ITC has been claimed. This undertaking, if recipient submits, then he should not claim the same in the GSTR 3B. This was overcome through this circular 147. Next, 147 amendment. Circular 147, amendment relevant to deemed export supply. This is what we've been discussing so far. Recipient cannot avail the ITCs on invoices for which refund claim, but when the refund forms were filed on the portal, it requires the claimant to debit from electronic credit ledger. So they made an amendment to the previous circular that the amount it can be claimed, and the claimed amount should not exceed the amount of input tax credit already availed in the valid return filed for the said tax period. There is one important recent amendment in relevant to claiming of refund in relevance to deemed supply of goods, deemed exports. 54.1 and 54.3, the refund provisions. It says we have 12 different categories of claiming refund. We are mostly familiar with being in Tirupur. We are mostly familiar with claiming refund of export of goods without payment of taxes. In some category, if we committed any errors, instead of declaring it as an intrastate supply, if we declare an interstate supply, or if any of our customer is making a supply through this e-com operators or government contractors, for them they might deduct TDS or they may collect TCS under GST. So filing this GSTR 7 or GSTR 8 form, we will be getting this credits of TDS and TCS, and which will be there in our electronic cash ledger. What shall we do with this electronic cash ledger balance? In case if you have any outward liability to be discharged against that, we can utilize it, or else any excess balance available on this cash ledger, that is also possible to claim. Relevant to export of services, both the possibilities are there. Export of services without payment of taxes and export of services with payment of integrated taxes. In both the category, we need to file RFB 01. In first category, payment is done in table number 3.1B, I think. Yeah, 3.1B, because 3.1A is the local supply, regular supply, intrastate and interstate supplies. 3.1B is all about this zero supply. If export of services with payment of taxes is promptly declared in 3.1B, parallelly in GSTR 1 also, then all those taxes that we paid, supported by the FAOCs, we can claim refund. In case if you are not claiming refund through payment of payment route, then similar route, we should process LUT, and then we should file our 3B and 1 on time, and we go for filing RFT 01, claiming all the eligible ITCs, for export of goods or export of services. You are already aware, input of services, inputs and inputs of services, both are eligible. Only thing, ITC and relevant to capital goods are not eligible for claiming refund. In inverted structure, only inputs alone is eligible, input of services is not eligible. And there is one special category, that is specialized agencies of UNO. For them, the refund itself is a different category, where for this specialized agencies of UNOs, they can claim refund separately through RFD 0, RFD 10, RFD 10. Even for them, the registration itself is not the regular process. Rather, they will apply for a UIN number, unique identification number, through which they collect and accumulate all their GSTs. And all the accumulated ITCs, either through the facilitation centers provided by this jurisdictional officers, they can claim refund under RFD 10. Relevant date. What is the relevant date? From when this time limit of 2 years is computed. If goods are exported, ultimately the export of goods either through air or through vessels and ship, it is determined through this export document like BL and shipping bills. So it is ultimately, we can end up with the conclusion that the date of a shipping bill raised and the date of BL copy, that is the date actually our goods got shipped. Because in the last year lockdown also, similarly in the current year lockdown also, there are difficulties faced by the exporters that they have completed with their production and they are ready to raise an invoice, but the shipments were not promptly taken as per the schedules. Shipment dates got postponed. What should we do now? So here, the date at which actually the shipment has happened, and that date is considered as supply of goods. That date is declared as supply of goods under zero-rated supply. If we are done with our manufacturing and we have invoiced it, and we have not exported it for a period of more than 1 year, then that particular export, even then it is shipped after 1 year, it is still to be considered as taxable supply, and local supply we are supposed to pay outward supply, which will not be considered for claiming refund and will not be taken up for computing adjusted total turnover. This timeline is not just alone for invoicing and sending the goods at a later time. And one more thing is invoicing it and sending it on time, but realization if it happens at a later time. And what is the timeline within which the realization should happen? In FEMA Act, they have given a timeline for that. Since we are discussing this relevant date, I will connect with the timeline required for realization also, export realization also. In FEMA, they have very clearly mentioned the realization has to happen from this relevant date within 9 months in case of export of goods. Last year, from April 2020 to July 2020, there was a circular issued by RBI stating this 9 months can be further extended to 15 months. In case I have received an advance money from my export customer, what should I do? If I have received an advance money, then I should ensure my supply within 1 year from the date in which I have received the advance. Fine. So this is the regular timeline. In case of export of services, the realization has to happen within 6 months. 6 months. Fine. This is the timeline which is taken up for realization aspect in GST also. These are the timelines mentioned in FEMA Act. That is what they are taking up for GST Act also. Relevant date in case export of services. Export of services, it's always date of receipt of payment. Services, it is not that easy to quantify as we do in export of goods. Goods we can easily quantify with the volume and we can judge with the value pretty easily, but services, it is not possible. So there is a possibility that invoices can be issued at a very early stage and payment can be looked up for at a later stage. To avoid all the confusions, for the purpose of a relevant date taken up in case of computing refund of export of services, it is always date of receipt of payment. If you take up Rule 89 sub Rule 4 defining this adjusted total turnover, this I have already highlighted. Again, I am highlighting in relevant to this relevant date. 89.4 adjusted total turnover. Adjusted total turnover includes the turnover in a state as defined under section 2 subsection 112 of the CGST Act, includes all taxable supplies, exempt supplies, export of goods and services. At that place of 2112, they say it is export, not a zero rated. From that 2112 definition, they exclude the zero rated supply of services. What is the zero rated supply of services then? The zero rated supply of services is equal to amount of realization and services completed thing plus amount realized at a later time for which invoices are issued at earlier time. Maybe for example, I have issued an export of services invoice in March, previous financial year, 2021 financial year. But I realized it only in the month of May 2021. So realization happened in 21-22, but invoice was issued in 2021. In the books of accounts, we declare it in 2021. For the purpose of computing zero rate supply of services and for the purpose of computing adjusted total turnover, we will take up that export of services value only in the financial year 21-20. There is a simple formula there that I will explain in the later slide. So this is the importance of relevant date. So always this 2-year computation also starts from this relevant date. For the purpose of export of services, relevant date starts from earlier of date of receipt of payments or issue of invoices where the payment is also received in advance, whichever is early. That will be the relevant date. In case if taxes are paid provisionally, then the date of adjustment of taxes. If in case of refund of unutilized input tax credit under duty of inverted duty structure, then the due relevant date starts from the end of the financial year for which such a claim for refund arises. From that time, another 2-year timeline is there. An account of accumulated credit of GST in case of a liability to pay service taxes in partial reverse charges, date of provision of services or invoice status. The RCM, it's like the time at which you internally raise an invoice and pay taxes and reclaim it. We can pay the taxes and claim it in the same month itself. So at which month we are paying and claiming, even for the financial year 2021. If we are making the RCM payment in 21-22, in the month of July 2021. You can claim it in July 2021 itself, and the service date also starts only from July 2021. In all other cases, it's only date of payment of taxes. This is overall view of what are the possibilities of refunds there, which we already discussed in elaborately. Only one point that I want to highlight: if the refund value exceeds 2 lakh, most of us will not certify the same because we work on most into the refunds of export of goods. In case if it is export under inverted duty structure. In case if the export is not under the supply of goods, whereas under excess in cash ledger. In case if an intrastate supply is strongly declared as interstate supply and the claim agreement is more than 2 lakhs, at that time a practicing chartered accountant or a practicing cost account certificates are required. Right. The other categories that we have already discussed and the different items also we have discussed. Next, documentary evidences, export of services, export invoice and FARC. This is far sufficient. Whereas from verification of goods, shipping bill, transporter challan, export invoice and packing list, bill of lading and bank relation certificate. All these things are essential documents to justify that the supply that we made is a zero rate supply. Now, the question is, so do I need to attach this bank relation certificate mandatorily for claiming refund? Since you are telling that for claiming refund under export of services, this FARC certificate is always mandatory. But if it is the nature of export of goods, attachment of BRC is not mandatory. It is not mandatory. That is already clarified in Circular 125. Fine. Next, concept of provisional refunds. Most cases we are not we are not witnessing this provisional refund happening. We rarely see this RFD 04s are issued that they accept this 90%. Once they acknowledge it, from the date of acknowledgement, within 15 days they should issue 90% of the refund. Rather, they are verifying it and completing the entire process, and they are issuing the final refund order itself under RFD 06. So what happens if an officer issues a provisional refund and after assessment he identifies that there is an excess issue of refund? What happens? So I have issued, the officer have assessed it. We have claimed 100 rupees as an eligible IDC for refund. Officer issued a refund of 90 rupees. After the final assessment in RFD 06, he finally arrived at 60 rupees, which means he have issued an excess refund of 30 rupees. What happens? That 30 rupees he will recredit to the electronic credit ledger PMT 03. Parallelly, he will issue RFD 07 stating you to pay that 30 rupees of excess. And 10 rupees of excess that we have claimed 100 rupees, and initially they issue 90 rupees, but actual refund order value at around RFD 06 is only 60 rupees. From the claim amount, the actual eligible amount, the difference is 40 rupees. Out of 40 rupees, the entire 40 will be routed through electronic credit ledger through PMT 03. The PMT 03 declaration we need to submit after the issue of RFD 06 order. The possibilities will be given in the portal itself. In the amount that on that 40 rupees, 30 rupees will be marked up against RFD 07 order. In RFD 07, they will mark up it is a liability to be paid off. And previously it was not so. What they do, they will adjust the ledger. Only 10 rupees excess eligible ITCs may not be eligible for the purpose of refund, but may be eligible for the purpose of adjustment towards outward supply. That 10 rupees alone will be recredited through PMT 03, and remaining will be adjusted, and the adjusted report will be declared in RFD 07. Now it is not so. It will be separately shown, and it has to be adjusted separately. Fine. These are the different categories of refund that also we have witnessed. Now, extension for, and one more important amendment which you have followed through this Circular 147 in March is extension of relaxation for filing refund claims in case where a zero rated supplies has been wrongly declared in 3.1a. It has to be declared in 3.1b, but it is declared in 3.1a. So what happens? See, this error, they have given a solution up to 31st March 2021 only to a few categories of people, not for everyone. Actually, this sort of errors we are witnessing it being done not just only by the export of services, a person or exporter who supplies export of services and makes IGST payment, and that route, or makes IGST payment and supplies to an SEZ developer or SEZ unit. Not that these two category people alone make this error. Even export of goods, a person making an export of goods through this payment route, even they also sometimes they commit an error of mentioning this exported supply under a intrastate or interstate supply and discharging the liability. For them, the solution is not there in 147 or in 125. First, in 125, they have given solution only for this type of wrong entries made either in 3.1a or 3.1c. 3.1c is exempt supply. Even if it is declared in 3.1c also, in 125, first they said any errors committed in such a manner during the period of 1/7/2017 to 30/6/2019, it can be assumed as the turnover to be considered in totaling 3.1a, 3.1b, and 3.1c of GST 3b, and that error can be reported in RFD01 and refund can be claimed. That period of coverage from 1/7/2017 to 30/6/2019 being further extended, and any such an errors committed by this exporter of services under payment route or supplier to an SEZ or an SEZ unit under a payment route, that particular errors committed till 31st March 2021. 31st March 2021 can be corrected. How it can be corrected? While going for claiming the refund on RFD01, the total of 3.1a, 3.1b, 3.1c will be totaled together, and for that, adjusted total turnover and zero rate supply will be worked out. But the same facility is expected by the people who have committed error in export of goods under with payment route also. For them, the solution is rather they have to discharge the actual liability again, and then in the refund also, any other column, any other category is there. One more category out of the 12 categories of refund, there is one more category called any other category. In that any other category, they have to go and mention that instead of declaring it in 3.1b, they have wrongly discharged in 3.1a. The excess taxes that is paid, and that excess taxes that is paid also discharged through electronic credit ledger or cash. Credit ledger is what major issue for most of them. So for the credit ledger excess adjustment, it has to be filed only through any other category under RFD01. Whereas these people who supply export of services or supply to SEZ under payment route, they can go under the as usual route of RFD01 under the as usual format of excess IGST paid under export of service route or IGST paid to SEZ developer unit route. Fine. And then before moving into the next amendments that has came in relevance to the circular 147 or notification 15, I just run through what are all the content there in this rules. Rule 89, application for refund of taxes, in which the one important discussion I had previously is that computing adjusted total turnover and zero rate supply of services, how it has to be computed. Is there the same value as per the aggregate total turnover declared in books of accounts? That thing first I will address, and then I will come one by one. The formula for claiming a refund under zero rate supply is the turnover of zero rate supply of goods plus services into net ITC. Net ITC is all the eligible ITCs except the ITCs which are already covered under Rule 89.4a or Rule 89.4b. 4b is deemed export coverage, we already discussed. 4a is 0.1% coverage. There is notification number 40/2017 supplied through 0.1% route. That ITC. Ignoring those two categories, all the other ITCs will be net ITC, adjusted total turnover definition, and this is the definition where during the relevant period they include the turnover within the state, but they exclude turnover of services. And point number B, they specifically add up all the non-zero rate services and the zero rate services, non-zero rate and zero services, plus they will exclude exempt supply. In case I do have ROSCTL licensor, I do have MES licensor. If I have made an MES supply, though it is a turnover forming part of aggregate turnover definition, it will not form part of adjusted turnover definition. Yes, this is what I wanted to discuss. The formula for computing zero rate supply of services. It is not as similar how we compute the zero rate supply of goods. Aggregate of payments received during the relevant period for a zero rate supply of services plus zero rate supply of services for which supply and payment completed, and advances already received. Maybe these advances might be received in the previous financial year also, for which supply might be completed only in the current year. That thing also, we need to gather those values from the previous financial year. I mean, we need to add it in the current financial year to arrive at this zero rate supply of services. From there, we need to reduce any advances that we receive in the current year. Still, that advance received, we will not compare with the supply. We will not compare with the supply. This is the formula for computing adjusted total turnover for the purpose of supply of services. For example, during the financial year 2021, the total invoices of my zero rate supply of services is 1 crore. 1 crore. Right? Out of that 1 crore, I have realized only 80 lakhs in the previous year, remaining 20 lakhs in the next financial year. Then, in computing refund, we will not take that 1 crore aggregate total turnover. Rather, we will take only the 80 lakhs for which supply and payment is completed. Since payment of 20 lakhs is jumping towards the next financial year, following financial year, it will be taken up only in the 21-22 financial year. Let's take this particular illustration for a better understanding. For the period of April 20 to August 20, export invoices carry A1, invoice number 1 with 10 lakhs, invoice number 2 20 lakhs, and invoice number 3 30 lakhs. This is the turnover that I have declared in aggregate turnover. This is export of service turnover declared during the period April 20 to August 20. In domestic invoices, during the same period, I had a domestic invoice of A4 that carries a 20 lakh value. Company received a payment of A1 and A3 in August 2020. That is, for A1 and A3, I have received the payment in the relevant period itself, in the relevant period of my refund claim itself. But A2, I have not received in the relevant period, rather I received in the later period, that is in November 2020. How to compute the zero rate supply and adjusted total turnover under Rule 89.4 for the purpose of claiming refund. The zero rate supply of any services include only those services for which supply also completed, payment also received. Whereas if the payment is already received in advance and supply is completed today during this April 20 to August 20, then that is also to be included. This is what we discussed in the previous formula also. So now A1 plus A3, only A1 and A3 are the invoices for which supply also completed, realization also happened. That alone is considered as a zero rate supply of services. What about this adjusted total turnover? Adjusted total turnover, it includes all the turnover in a state as per definition 2112, but excludes services. Rather, again, it includes a zero rate supply of services. A zero rate supply of services computed as per the above solution. If I directly include services, what happens? The entire value of A1, A2, A3, all the invoices will come and accumulate in adjusted total turnover. Instead, I'm ignoring the entire services of the 60 lakhs. That is the value of A1, A2, and A3. I'm ignoring all these three values, and then I'm adding up only the value that has to be taken up for zero rate supply provision. Only the invoices for which supply and relation also done. So here also we ignore 60 lakhs and we add up 40 lakhs. We ignore 60 lakhs and we add up 40 lakhs. So adjusted total turnover will come up to 60 lakhs. So if the eligible ITC is 100, then the formula will be 100 into 40 divided by 60. So the ITC eligible for refund is only 67 during the period of April to August. It is not 100 into 60 divided by 100 into 60 divided by 80. See here, I need to make one particular correction because adjusted total turnover includes not only the export turnover, it includes the domestic turnover of 20 lakhs. That 20 lakhs I have added up. So 40 plus 20 is 60. So adjusted, as if I go with the definition of adjusted total turnover defined in 1894, out of 100, ITC eligibility is of 100, I am getting eligibility of only 67 during the period of April and August. If we miss out this provision and compute adjusted total turnover as equivalent to aggregate turnover, then we will end up in higher claim of ITC, but is absolutely wrong, which means we have claimed an excess ITC. That excess ITC can be claimed only at the time of realization that happened only in this example at November 2020. Fine. Okay. This particular provision I want to highlight in Rule 89. So anyone who is going for a refund under export of services, we have to be so cautious on computing aggregate turnover for the purpose of books of accounts and 1 and 3B, and for the purpose of computing zero rated supply of services and adjusted total turnover for the purpose of refund. There we have to be very clear. Rule 90 talks about acknowledgement. There is no deficiencies in the RFD 01 that we file. The jurisdictional officer will acknowledge it by issuing RFD 02. Once the RFD 02 is issued, from the date of issuing the RFD 02, another 15 days time, they are supposed to issue provisional refund. During the last lockdown time, there was an instruction came to the officers to issue the refunds. To speed up the process of refunds. Like that, if any in between instruction comes to the officers, they will not even look into this provisional sanctioning and all. Rather, they rush up with their assessments and they complete sanctioning the entire refunds under RFD 06. Rule 91 is RFD 04, issuing of provisional refunds. Rule 92, it talks about issuing RFD 06 of the entire refund. Following the RFD 06, they will issue RFD 05. The differences with this RFD 06 and RFD 05 is, if there is any delay in issuing this refund order after 60 days from the date of acknowledgement, then the certain officer has to issue an order for interest also. Interest at the rate of 6% for the delayed settlement of refund. That also need to be added in RFD 05. RFD 05. Any claim which is eligible for adjustment but not for the purpose of refund is rejected. PMT 03 will be enabled after RFD 06. That can be filed up. That's a self-declaration form. Once it's filed, the rejected ITCs will again come back and set in our electronic credit ledgers. Moving on to this 95 and 95A. This 95 is particular to this specialized agencies and nations filing RFD 010. The 95A, this amendment also came in 2020, that any retail outlets located in the departure area of an airport, that particular supplies made by them, they can go for claiming refund under RFD 10B. While issuing this RFD 06 and 05, the corresponding officer will issue one more statement also under RFD 01B. That is an entire statement declaring, classifying the amount of refund claimed, amount of refund rejected, the mode of payment, everything will be detailed in this RFD 01B. Following that, there are two amendments which have come up. Those are already mentioned in section 54, subsection 10, this withholding of refund process and withdrawing of refund. Is there any possibility, sir, after filing my application for refund, is it possible for the SSC to withdraw his refund application? Yes, they have issued a new form for that, RFD 01W. Let me show that. 1 second. RFD 01W. See this RFD. Yes, this is RFD 01W. Hope for everyone is visible. This RFD 01W is an option given to the SSC to withdraw his refund application, but there is a certain timeline for it. This withdrawal need to be done well before any provisional order for refund is issued, that is under RFD 04. If I want to put it in a simple formula, then it will be earlier of issuing RFD 04, RFD 06, or RFD 08. So RFD 04, the order for provisional refund, RFD 06, the order for the final refund, or RFD 08, asking for a clarity, issuing a so-called notice and asking for a clarity in relevant to the export document that we have filed and they have acknowledged also. What it means, even after the RFD 02 acknowledgement, there is a possibility for the exporter to withdraw his application. But once RFD 04, 06, or 08 is raised, we cannot withdraw the same. The option for withdrawal will be excluded or will be hidden from the window. There are some problems, practical problems that we meet out in getting this RFD 08 notices by the SSCs. Like, so they have filed the form and they got the acknowledgement also. The proper officer, after verifying it, he is requesting for some other details through this RFD 08 notice. She also filed this RFD 08 notice from the officer's login. Because of the portal issues, sometimes that RFD 08 might not reflect properly in our window. What shall we do now? Is it at that time, do we go for a withdrawal of application and file it fresh, or do we go for manual submission of the details required? Now, here 97A rule specifically gives an option for manual filing of certain documents if it is necessary. There is a provision where the eligible ITC that we claim has to be verified with GSTR 2A. If already available in GSTR 2A, the proper officer cannot ask for any further documents relevant to the particular ITC. If not, and if the claim is anytime, at that time they can ask a document to be submitted, that too in the scanned format. In some cases, they are asking us to submit manually too. Still, the manual application submission is made available in this rule in 97A. So using that particular provision only, we can go and submit that required the details that is required in this deficiency notice of RFD08 manually. Only the special circumstances where portal is not reflecting, from officer side was done, from our client side is not reflecting, at that time only we can go and submit the same. Otherwise it is not okay. It is not it is not the proper way of withdrawing the application and then filing it again. What happens, since this notice is not reflecting, if we withdraw the application and we resubmit it, there will be two tasks which will pop up in the window of the particular officer. So in one task, it shows that already this application for the period is taken up and the deficiency query is raised. In another task, a fresh application will also come in reflect. Maybe in some cases, ITC that is already debited from the electronic ledger will not promptly recredit. So it's better to have a confirmation from the jurisdiction officer and then go for withdrawals in case of any clerical errors happened in the portal, because any errors happen in the portal. But there are other grounds for which we can go for withdrawal. We have declared a wrong value in adjusted total turnover. So we identified the latest stage. So we are withdrawing it. Or we are under out of 12 category, we have declared it in a, instead of declaring it in export of goods without payment of taxes, I have declared it in export of services with payment. If I wrongly opted for the headings, for that reason also we can withdraw the application. Any details or attachments that we have wrongly attached, for that reasons also we can withdraw. But I suggest you not to withdraw for the portal errors. Only if it is an error technical about the provisions that we need to adhere with. If that is the error, then we can withdraw. Otherwise, we should not withdraw the applications. Right. And the other advantage and amendment which is relevant to section 54 is this part A and part B of RFD07. Previously, when we go for a claim of a refund and parallelly there is a demand to be settled off with the officers, what they do, they can adjust this claim, and after adjusting whatever they left over, and that will be sanctioned as a refund. And all this adjustment things and everything will be detailed in RFD07. Now it is not so. Now what happens? Rather, they will take up the process of our refund form and they will issue an order for withholding our refund and relevant to some of the reasons, like maybe the demand notice are not paid off, or the refund that we come up is giving an adverse effect to the revenue of the department under subsection 11 or 54, or they are identifying any fraud series of nature activities happening. At that time, the officer can issue a withholding order under part A of RFD07. Once it is rectified, then part B will be issued. Part B is sanctioning of that particular withholded refund. This mostly happens when we file RFD01 for export of goods without payment of taxes. The same idea, if it is done through with payment of taxes, using the same formula, they withhold our refund and classify it to risky exporter category. Reasons: they feel there is an adverse effect to the revenue, or they identify there is some fraudulent activities happened in claiming ITC or declaring the outward value, misplacement in declaring, or the wrong values of declared in outward supplies, like that. Any reason that they find it adverse, for that, in payment route, they classify the risky. In non-payment route, now they hold this part A and Part B of RFD 07. These are all the recent changes happen. Right. Next. Related to this adjusted total turnover for export of goods, there is one more amendment which came in Circular 16 of 2020. It said the value of export of goods that we classify for aggregate turnover definition should not exceed 150% of the similar value of domestic goods. While this Circular 16/2020 came, all the jurisdictional officers started asking this declaration initially from the clients. It's fine because the client knows what will be the value at which this particular goods domestic supply will be, and what will be the value at which the same similar goods at export can be done. Even then, we had cases where there are exporters only there are exporters who doesn't have any domestic supply. It is not at all possible for them to take a comparison against that parallel export of goods export of goods value. So for them also it was a difficult task to arrive at and what value to come up and compare with. And going forward, same jurisdictional officers started asking this thing to be certified by chartered accountants, and we are all certifying it. And the yard scale for this 150% determination is still questionable, because even then these concepts are very similar to how we arrive at this arm's length pricing when we work out this transfer pricing cases. So where at least for that we have a control, we have different methods to arrive at a value. Here we are not having any particular ideas, and if we take, say for example, exporter A regularly making export of goods to UK, and he is not making similar variety of goods or similar kind of goods in the domestic market, but for him, for his export value goods, we cannot take any other items of local domestically available goods value and take it up for the comparisons. And if so, we are the auditors, no other go, we are in the position to certify the same. And if we look forward for this cost plus method, I'm just suggesting, if you look for the cost plus method, we cannot determine the margin that the entrepreneur is supposed to declare. Whatever margin that he wants, he can declare it up. So it is, it's not okay to get it certified from a chartered accountant rather, unless otherwise the sufficient information is to be provided to a chartered accountant for making the comparisons. So in the Circular 16/2020, when it comes, it started asking this 150% is the value. It doesn't mean this is the value that we need to declare in the books and in the GS 713. That is totally different. There it is asking only the turnover in a state as per 2.112. Only for the purpose of refund, when you compute this zero turnover and adjusted turnover, we should take the 150% of the value of the similar domestic goods. That 16/2020 circular was further modified in 147 circular stating actual value per unit of goods. So now from the value, they've added this one more term, per unit. It should not be more than 1.5 times. If it is more than 1.5 times, then the numerator zero supply and the denominator adjusted turnover will be taken up only to the maximum value of 1.5 times, not the actual value that we declared as turnover in state for books of accounts or in 3B and 1. How it works? Let's take this example. Suppose a supplier is manufacturing only one type of goods and is supplying the same goods in both domestic market and overseas. This is very simple case where at least he has a yard scale to compare this overseas supply with the domestic. But if they are not having a yard scale, then it's difficult. It's very difficult to manage. Not just for textile industries, for every industries, even for the coir industries or any export for that matter, any goods exporter for that matter. During the relevant period of this refund, the details of his inward supply and outward supply are given here. The ITC eligible is 270. Against this, the local quantity 200 value per unit is 200. Number of units supplied is 5. So turnover is 100. So the value per unit of that particular goods that we exported, the domestic value is 5 rupees, which means 5 into 1.5. That is the maximum value at which we can take it up for computing zero rated supply of goods and for computing adjusted turnover. So 5 into 1.5, it will be 7.5. And what is the quantity that they have declared? 200. So it is 1,500. it is 1,500. Actually, the quantity that we've exported is same 5, but the value is 350. So the turnover that we declared in GSTR 1, 3B or in books of accounts is 1,750. Either way, we will be realizing the 1,750 only, but computing this refund formula, we will not take up 1,750. Rather, we take 1,500 only. The numerator will be 1,500, and then the denominator will be 2,500. See, the other turnover includes only the 1.5 times of the domestic turnover. So numerator will be 1,500 into 270 divided by 2,500, which means the intention of this particular amendment came in 16/2020 circular, or clarification came in 147 circular, is they want to restrict the maximum, or they want to fix a maximum cap for the amount of refund to be claimed. If they have not introduced this particular 150 times or 1.5 times of the domestic supply provision, the same 270 ITC, the refund will be 270 into 1,750 and divided by 2750, which will be more than what actually the refund amount is showing here. It is 162 source here. If we go up with without this circulars and all, if we go up with the whole formulas, then it will be 172. The understanding that I get over this particular cap is they want to restrict the maximum amount of refund claim. Don't know the reason for it, but rather they want to fix a maximum cap for the claim of refund. This provision we have to be very careful, and solutions, if we chartered accountant are certifying this value as per the data given by the client or the assessees, that this is the local quantity value or this is the export quantity value. Anyways, we have the shipping bills and export invoices. From that we can easily determine. For the comparison purpose, if the suppliers, if our customers is gathering up any data and submitting it, now we are the one who need to justify the same, and for that whatever data is required, and that data we have to gather it for our safer purpose of certifying the same. Right. And so far we have discussed about this export of services as a total turnover definition, and also we have discussed about this amendment on 147 relevant to this 1.5 times, and we also discussed about the timeline, the next amendment in 147. That is, if I file the refund and deficiencies are issued at later time, say for example I filed the refund on 17/6/2021, deficiency came on 22/6. So the time between 17 to 22, that days will not be computed for the calculation of 2 years from the relevant date for claiming the refund. The maximum tenure to claim the refund, the 2 years timeline, for that timeline under circular 147, from the date of application till the date of deficiency notice issued, that timeline will not be taken up. Right. Next, inverted duty structure refund. The formula is very similar, but only thing, instead of zero rate supply of goods and services, it will be turnover of inverted supply of goods into net ITC. ITC here only the eligible inputs, not the services. If not the services, I don't know what is the purpose of because since they are not taking up that input of services, every person who claims refund through this inverted duty structure has a huge volume of accumulated ITC staying in his books. Next, and relevant to notification number 15, this point I've already discussed. That is the exclusion of timeline between the date of application of refund and the date of deficiency notice under RFD 03 for computing 2 years from the relevant date. Next, in relevant to rule 95, option given to withdraw the refund application. This is also I've already clarified. The withdrawal can be done within the earlier of RFD 04, RFD 06 or RFD 08. Right. What is it omitted in this 90:1 rule? This part also I've discussed. If any outstanding demands are there and we parallelly done with our refund applications, what they do from the amount of refund sanctioning, they will adjust all this amount dues and they will show a report in RFD 07. Now it is omitted, rather replaced, I would say, replaced, and they will issue refund separately, and they will issue part A of RFD 07, withholding of refund. Once the demand issues are settled, or the query that is raised for this withholding under part A, if it is resolved, and then it will be followed by part B of RFD 07, and it is followed by RFD 06. And this also we have already gone through. Now coming again to this circular 125, that is a master circular. From the master circular, the recent amendments are one thing, the timeline of computing this errors, or the timeline for computing refund application date to deficiency notice, and in 147 circular, computation of adjusted total turnover purpose for the purpose of export of services, and 147 circular, this 1.5 times the value that we need to take up. All these things we have discussed. More than that, in 125 circular, and I'm rewinding, this is already issued in 2019. They're given clarities on what about the ITCs accumulating on compensation chest. See, I'm purchasing coal, and using that coal, I prepare aluminum products and I export aluminum products. If I do purchase coal, I suffer paying compensation chest. That compensation chest also already accumulated and made available as ITC. What should I do with this ITC, sir? That ITC, I can claim it in refund if my outward product, I'm supplying it under export of goods under without payment route. In case if I'm supplying, we'll complete this thing and then I will complete query. In case if I'm supplying my goods under payment route, integrated tax payment, then that particular chest I'm not eligible to claim. There is one critical situation which always comes in our city is for all the dyeing industries. Here, dyeing industries, they are not covered under refund under export category. Rather, they are covered under refund under inverted structure category, because of their outward supply is 5% and all the chemical dyes under 12%. For them also, most of the dyeing industry, they procure coal and they suffer compensation chest. That compensation chest that they pay, they are not eligible to adjust and claim against this refund under inverted duty structure. My suggestion would be, instead of keeping, in case this is a bigger size concern, instead of keeping the dyeing units separately, if they can merge those units with the export units, so that the compensation chest also can be parallelly claimed against the outward supply of export supply of goods under without payment of food. There is one important thing I thought to discuss, and then regarding this compensation chest. Okay, let's go on to the queries. I have a list of queries also. In queries, I will address one by one. So how the process is, how the portal windows will look like. Once you log into this application for refund, once you log into the GST portal of the particular RC using the username and password, in service categories, refund category, you have this application for refund column, from which you have this 12 different items of refunds. Most of us will stick on to this refund of ITC of export and goods services without payment of taxes. This first item, electronic cash ledger, maybe TDS TCS cases, since if we supply our goods through e-com operators, definitely we will have this TCS item. And if that TCS item is in excess available, you can use this first column. On account of refund by recipient of deemed export, this fifth item only I said in Circular 147 recent amendment from March 2021 that the recipient can claim the ITC but get a declaration that it is not again claimed by the supplier for his refund purpose. Any other column, maybe this wrongly paid taxes can be taken up for any other column, or excess payment of tax. On account of assessment or provisional assessments or appeal or any other order, here we file a refund and for example, I filed a refund for 100 eligible ITC. Officer issued only for 80. Remaining 20, I look up for assessment. I went up for an appeal and I applied for an appeal. And in appeal, if I got it in favor, depending on that particular order, I can claim it through this last column. Fine. Once I select the option, it will ask for the financial period, month, and then the attachment that we need to. It asks for an Annexure B, a template, a ready-made template, which is available in the offline utility that need to be filled up, and that will be validated only if all the data are promptly filled. In case of export of goods, BOC is not mandatory. Still, then it will get validated, and once after validation, we will enter the required values, the turnover of zero to turnover and net ITC, and automatically the eligible ITC for refund will come and reflect here in this window. In case if you have compensation just to be claimed, that is also can be claimed here. And out of the eligible refund, the order in which we need to claim that eligible ITC is, if we have the sufficient balance in IGST ledger itself, then the entire amount need to be claimed in the IGST ledger. Once this IGST ITC ledger is exhausted, then we need to claim equally in CGST and SGST. After adjusting CGST and SGST, if you do have still excess, that need to be adjusted in CGST. May not be in the other question. Most of the time, what we have is after adjusting CGST and SGST, still we have excess claim to be done. Then most of the time, the balances will be in the SGST because of that ITC adjustment provision in the later times. Oh, sorry, in the previous times that it was there. In the previous times, ITC adjustment, they had a formula for it. That is, all that outward liability first it has to be adjusted with IGST ITC, and then with CGST, and then with CGST, and then with SGST with SGST. But IGST liability first it has to be entirely adjusted with ITC of IGST, and then in a proportion towards CGST or SGST in the proportion that we want. Even before this this provision comes in, it was like after adjusting IGST, we need to entirely adjust towards CGST, and then we have to come forward to SGST. That was the provision before this. Any proportion amendment came, any proportion between CGST and SGST amendment came. So from that time, there are few cases where we get accumulated ITCs only lying in SGST columns. Accordingly, we can claim. Then the bank details, which we already submitted during our registration time. If we have more than one bank account and that is already submitted and reflected in our GST certificates, any one of the bank account can be selected here, and all the supporting documents. The supporting documents for each category, there are different documents. These are highlighted only for export of goods and export of services. Export of goods, I said shipping bill, BL copies, export invoices, if possible, realization certificates, and Annexure B, that all the ITCs that we claimed are matching into A. In case we are claiming any excess ITC which is not there into A. Say, for example, a situation where the invoice is issued by the supplier in the month of August itself, but the supply is completed only in September, and the recipient claims it only in the month of September. What happens? This ITC that I claimed in September will automatically already reflect in August month, but I'm going and claiming a refund only in September month. Since it is not in 2A, the jurisdiction officers cannot ignore it. Rather, they can get the copy of the invoices and they can match it up in the Annexure 2A, which is already there in August, reflecting in the August Annexure 2A. That can be taken up. That clarity is also given in Circular 125. So once it is done, we can make a submission. In this template, we are supposed to mention all the invoice details, number, date. One more important classification is whether the ITC that we claim is a goods or a services, and whether this is reflecting in GST or 2A or not. If it is reflecting, we have to mention yes. If it is not reflecting, we have to mention no. To the extent that we are mentioning no, parallelly, if any document is required for that, we need to submit. Mostly they will ask for an invoices that we have to scan and submit. We have more number of invoices, we have more than we have to scan and submit. It is as per Rule 89. Next. So once we create this file and validate, we will get this JSON file and we'll upload. And if it is uploaded successfully, the values will automatically reflect here. And finally, we'll end up in submission. Before submission, the values available, that is on the date of application, what is the balance available in each ledger? And during the relevant period for which we are going for refund, at that relevant period, what is the balance available in the different ledgers? Whichever is less, that only we can make our claim. And this is how we submit. Once we submit it, we will get this ARN numbers. This ARN number, after this, the department officer will send an acknowledgement under RP02. Right. Fine. So these are the things we already discussed. So I'm running to the queries that we need to discuss. Yes. This 125.4 initially, when the GST was introduced in 1st July 2017, parallelly in customs provisions also, the higher drawbacks were allowed. Once we claimed this higher drawback at that time, refund under CGST is not retained. That is clarified in Circular 125 in 2019. So it was already followed up by the officers, and in case if any assessee have claimed the GST and got the higher rate of drawback also, from them it is reverted back with interest also, with interest. Documents essential, particularly I've selected only for this export without payment of taxes and export of services with payment of taxes, because these are the most cases that we follow in our place of practice. Declaration that we need to give is as per the provision of 54.3, ITC has been promptly discharged, and claimed ITCs, we have made a proper reversals under Rule 42, Rule 43 also. Nowadays, there are in some circles, officers are asking whether the net ITC that you are claiming is after the proper reversal under Rule 42 and Rule 43. That is, one second. We'll come to your queries after completing the entire slides. Only I have a few more slides to complete and a few more areas to touch up with this ROCT, and then I will address all your queries one by one. Regarding this Rule 42 and Rule 43, any ITCs which is common ITC in parallel to exempt supply and taxable supplies. Maybe for the 100% new OUs, we don't have exempted supply classification. ME is also not subject to exempted supply classifications. Even recently also some of us started getting this error audit notices asking for a reversal of common ITC in proportion to exempted supplies. But let us say it was kept in abeyance. Don't know when it will come again. At that time, we have to ensure this Rule 42 common ITC reversal will promptly happened or not. If that is not happened and you have claimed this common without making this common reversal, common ITC reversals and claimed entirely the refund, then when these notices are raised, at that time we will be in a position to reverse our ITC along with interest. Most of these documents, since we are all familiar, that BRC has to be attached or FARC has to be attached in case of export of services, all this is a familiar thing. So it is not required to much of discussion here. Next. Annexure B is also clear. Coming to this, some of the queries, I said compensation chess. Yes, it is eligible for refund, but eligible for refund only for the exporters without payment of taxes. ITC is reversed, and is it possible to claim the reversed compensation chess ITC? See, thinking that I don't have any export of goods without payment of taxes, or I'm not aware of what to do with this compensation ITC. What I did, I claimed this compensation ITC and I reversed it in the same month. For example, in April 2020, I claimed compensation ITC, but I reversed it. Only in June 2020, I realized it. Oh, this compensation ITC is also eligible for refund. And what I did, again, I'm going to claim that ITC of April in the month of June. If I'm claiming so, that particular ITC of compensation chess will not be eligible for purpose of refund. LUT, yes, of course, if it is filed in delay, after the export was made, it can be condemned based on case-to-case allotment or approval given by the jurisdictional officers. Next. Yes, do self-declaration for non-prosecution required every time for LUT route exporters. Every time declaration is not required. A single time declaration had to be done annually. But I suggest to take up this LUT in the beginning of the financial year itself. What are the proof of relation required for export of goods or services? Ultimately, BRC, in case of export of services, FARC. In this Rule 94, there is one particular point we need to note. Any particular exporter who exports to Bhutan, and that too under payment of taxes route, that is integrated taxes paid and exported to Bhutan, for them, there is no possibility of refund. There is no possibility of refund. Rather, the taxes paid will be given to the Bhutan government. This is there specifically mentioned in rule. So any exporter who is exporting goods to Bhutan have to be very careful if they opt for export of goods under payment route. Do LUT or bond required for export of non-GST supplied goods or exempt supplied goods? See, only for taxable supply of goods, this LUT is required. Just to avoid paying taxes, giving a self-declaration that I'm making an export and definitely will realize it within the time frame mentioned in FEMA Act or RBI Act. If I'm doing an export of non-GST goods or exempted goods, still I'm eligible for refund, but there is no requirement to declare LUT or bond. No requirement for declaring LUT or bond. Do exporters import, so do unutilized transitional credit available for refund? This and all well explained before in 1718 itself. Transitional credit or not the credit applicable to the relevant period for which we apply for refund. Hence, transitional credits will always not be eligible for claiming refund. The exporters import inputs and capital goods eligible for claim refund of IGST paid on exports. They do. For computing net ITC and enumerated district, do we claim all ITCs of inputs? We may not claim all ITCs of inputs. ITCs when relevant to the supply. We will claim all the ITCs of inputs. Only thing we will not claim ITCs of input services and ITCs of capital goods. Excess in cash ledger due to TDS thesis we already discussed. In which category merchant exporter need to claim the refund? Can you opt for IGST payment route of export? IGST payment route of export is not possible for the exporter who procures goods from the merchant exporter under 0.1% scheme. He cannot go for payment route of export. He can only claim export under LUT route. Then only his supplier, there is a merchant export supplier also, can claim his refund under 0.1% route. How this process flow happens? In case of IGST refunds, that is payment route refunds, first we claim it in, we declare it in the shipping bill value, and then we are claiming it in GSTR 1 and 3B. The moment we are done with the process, it goes to the sanctioning authorities at Customs Port, and then they are formulating it and they are releasing it. Till the process of it traveling to central DDO, it is covered under CBIC. After that, it goes to this PFMS platform. What is the need for understanding this particular chart? Most of the cases when it is classified or taken up as a risky exporters, we don't know from whom to be report, from where we need to ask for the details like that. That time, once we understand this chart, if the refunds are held at either at ICS or IC gate, for that we need to approach only the CBICs. That too, the jurisdiction in case of the exporters located in Coimbatore, the jurisdiction, in case of exporters located in Tirupur, it is mostly covered in Coimbatore jurisdiction, where a particular officer will come up for an inspection and will ask for necessary details, asking for the matching of ITCs, that ITC promptly transferred in. All these things we have to justify, and we have to ensure that 100% we are okay. Then they will submit this formal letter that this exporter can be classified out of risky exporter classification. And then again it moves to the central DDO and PFMS platform. It enters to PFMS platform. Refunds are automatically generated to our bank account. How it works in LUT route? LUT route, we file this RFD 1A, then the sanctioning authority, they issue RFD 06 and RFD 05. After that, it goes into the PFMS platform. Now comes this ROSL, ROSCTL, and RODTEP. So far, I done with this refunds and export definitions under IGST Act and CGST Act. And I've mostly highlighted through this master circular of 125 and circular of 16/2020 and the recent circulars of 147, the recent notification of 15/2021. These are all the recent things and amendments and circulars came for the export of goods or services and relevant to the refunds. What about this ROSL, ROSCTL, and RODTEP? First, let's understand what is this concept of this ROSL, ROSCTL, and RODTEP. ROSL is a rebate on state levies which is issued to benefit the exporters who have suffered taxes which are not eligible or not covered up under a refund under GST. So to boost them with this benefit, initially they have issued this ROSL. This ROSL as like a subsidy that how we receive for a drawback. All the duties that we paid, we're getting as a duty drawback. In the same manner, this ROSL is also sanctioned. Parallelly, the exporters got one more benefit called Merchant Export Incentive Scheme. In case of a service provider, it is Service Export Incentive Scheme. For them, it was around 2% or 2 to 4%, I think. To the extent of export FOB value they made, on that either around 2 to 4%, they get it as a script, and that they can download it and they can sell it to any importer if they are in requirement for. Since this MES scheme is against WTO rules, so now our country was in a position to change or drop these MES provisions and look forward for some other benefits to be issued to our customers. Parallelly, at that time, till 31st December 2020, exporter had this benefits of drawback to a certain percentage of 1.9 to 2.9 percentage, and ROSL somewhere around 2 to 4 percentage, and this MES around 2 percentage. From 1st January onwards, they have started bringing in this RODTEP in the place of MEIS. So MES will be dropped, RODTEP will be made available. What happened? They said from 1st January, this RODTEP come. Still, this rates for this RODTEP is not introduced, not reduced. Almost 7 months have gone. So the art textile industry have suffered a lot. They made a representations, and accordingly, they have got back their ROSCTL. So instead of MES, from now on, they are eligible to drop this ROSCTL to an extent of 4 to 6 percentage from their FOB value. It is also similar to script. They can download it under ROSCTL script and they can sell it. What about this RODTEP? RODTEP is not applicable for textile industry as of now, because textile industries alone, they got this extension for ROSCTL itself. RODTEP for all other sectors, still rates are not defined. Possibilities in RODTEPs, they have both the rules. A separate account will be opened for the particular exporter other than the exporter under textiles in DGFT itself, through which either get their refunds, and either they will get their refunds in their login itself, that either they can encash it like a drawback or ROSL, the previous scenarios, or they can download it in the form of script and they can sell it. So far, RODTEP rates are not defined and is not available. But for our sector, textile industries, ROCTL is going to be continuing for 31st March till 31st March 2024. And that will be around 4 to 6 percentage. That benefits is similar to MES. But now the window is not allowing. Temporarily, they have, they have withheld this window. Probably they will open up at an later stage. How the refunds for this particular things are processed. I'm almost in the last slide, sir. We'll complete this and then take the queries. Ministry of Textiles, they allocate funds for the CBAC relevant to this RODTEP or ROSCTL. Every year budget, they announce the level of allocation. They have been doing it for every ministry, every sectors. To the extent how much they have been allocating for this particular Ministry of Textiles, from there they will sanction it to CBAC. Through CBAC route, again this ROSCTL will made available to the exporters in textile industry. For other industries, it is RODTEP. Okay. Apart from this, time limit also we have discussed. Forms for filing refund claims also we already discussed. Yes. Can a merchant exporter to purchase goods without payment of taxes on furnishing a declaration form? That is not possible, because notification board 40 have clearly defined the path or defined the procedure through which they have to file. Withholding of refund we have already discussed. Casual tax persons and non-resident tax persons, the refund formula itself is totally different, because the timeline at which they operate itself is limited only to 90 days. Further extension another 90 days, maximum for a period of 180 days. Interest on delayed refunds, these also in between I have discussed, it will not exceed 6% in case they have delayed in issuing RFD 06 and RFD 05. RFDs, if they delay in issuing RFD 06, the interest rate will be computed and this will be added up in RFD 05. Right. Now I will take up the queries. We'll take up the queries and then for inverted refund July 17 to July 18, ITC reversal must, and if so, any interest to be paid on the matter. Yes, of course, since we claimed the ITC and we have adjusted for it, and definitely will be in a position to pay interest. Inverted ineligible business list mentioned. There is no specific list of inverted structure, ma'am. Maybe one fine day they come up with an amendment stating the outward supply of dyeing charges is no more 12%, no more 5%, it has to be 18%, then automatically even the dyeing industries, they will go out of inverted structure. So there is no specific list, ma'am. As of now, all the items for which outward supply rate is lesser than the inward supply rate, which will be taken up and covered under inverted structure. Whether form and process to be followed for 0.1 tax merchant export supplier also. Client supplying to exporter, or whether it is or for supplying to UOU. So supplying to UOU, one category, Form A and Form B, definitely they have to adhere to. In case a merchant exporter supplying to 0.1%, they also have the similar procedure, not in the Form A, Form B format. For them, they have to frame a covering letter, and along with this covering letter, they have to attach the PO once they got the. Maybe they will cut off like every month. They should submit all the POs that they've got from their exporters, and parallelly every month whatever shipments are done through that exporters, and that shipping bills, if this merchant exporter details are mentioned, that detail has to be taken up. It has to be matched up with their merchant exporters invoices. It also need to be filed to the local jurisdiction. It has to be done separately, and then it also says separately before filing RFP01 forms. Any practical issues? The practical issues is that always the service ITC is getting accumulated. But to overcome with this, we need to have a financial planning in such a way that we can merge industries which claim inverted, if possible. For all those possible organizations, we can merge industries with inverted structure supply with export supply also. Like that, we can plan. We can only do the financial planning. Otherwise, we can request the government to add up services also, services category, also, ITC services category with 18%, 12% also by amending this net ITC in Rule 18. Merchant exporter saying that it is for UOU and not giving any forms prior to supply. They are giving shipping bills after supply. So that is sufficient, sir. That is sufficient, sir. Before that, from the exporter, you get the purchase orders also, sir. That you have to file separately, or else every month collect that purchase order, parallelly their invoice matching up with the exporter's shipping. If that you can make it a separate file and file with the jurisdiction, that is sufficient. Fine. Hope I have done the justification for my topic, and any queries we can discuss that.
Now the floor is open for the queries. The members can ask directly or through chat box. I think,
Members, you have any doubt? Kindly ask, unmute, or
You're all already familiar and in detail, sir, with this export refund and all. Only thing I wanted to highlight is in relevant to the circular 147 and notification 15, the timeline and the deemed exporters claiming ITC, the recipient of the deemed exporter claiming ITC, and then this 1.5 times of the value, that we need to be careful. And the next area is, in case we are the exporter of services, we have to be very careful in arriving the adjusted total turnover and zero rate supply for working on the refund and the RFP01. These are the highlights of today's session, sir, actually.
what about that mail clients received recently about Shara audit query, that reversal of MEA's say exempted sales?
Yes, sir. Sir, this MEAs, in my perspective, first, for the purpose of refund, this is an exempt supply not considered. Whereas for the ITC reversal, though the exempt supply is considered, against the MEA supply, if we classify and or common ITC against this MEA supply, we will be ending up with only a meager amount of ITC items, because MEAs, it is not something in relevant to our export. We procure, we manufacture, we transit it, and we supply it. Till the process, it's only entirely relevant to the export. After export has happened, it is also subsidy similar to drawback. I don't know why, for the purpose of this MES sales, office is asking us to look forward for reversing the common ITC. Even then, in parallel with, if you want to connect some common ITC towards this MES, I'm finding only this bank charges for making the realization or consultant charges that we pay for claiming that MES. Maybe that alone can be considered as a common ITC for the purpose of reversing. Other than that, I'm not finding any other ITC to be reversed. In case if we do, if we have MES as an exemptions.
Thank you. Is there any other questions? Shall we wind it?
Yes, secretary is available. What are the
Sir, before winding up, it's an honor that I'm again given an opportunity in my own branch for handling a session, that too for members. So I'm always privileged handling sessions at my home branch. Thanks a lot for the branch and my seniors, especially my teacher, Shivasam sir, who have framed me in all the way and giving me this opportunity of presenting a session to our beloved members. Thanks a lot, sir. Thanks every member for patient listening throughout this 2 hours. Thanks. Thank you. Thanks a lot.
Thanks, Vishnu. Thanks. I guess secretary.
Oh, okay. Secretary now will propose vote of thanks.
Vote of thanks.
Secretary, you are in mute. Actually. Yeah.
Unmuted.
Still you are in mute. Surround you are in mute. Unmute. Yeah.
Unmute இருக்கு. Unmute பண்ணு. Mute இருக்கு.
Hello.
Okay.
On the behalf of Management Committee of Tirupur branch of SIRC, I thank to our home member Vishnu Kumar for giving this seminar on zero-rated supply and practical issues faced through refund. Thank you. Thank you, sir. Thank you, Vishnu.
Thank you.
Thank you.